right, we will go ahead and get started. Thank you guys so much for your patience. This webinar is being recorded, and I will send the link to the recording to everyone once it's finished. Hello, and welcome to our webinar entitled Adulting 101. This is brought to you by Northwest Financial Wellness Series, and this webinar is being recorded as previously stated. My name is Denise Kitchen, your host, and I'm one of the relationship managers for the company partnership program. Our department manages the partnerships the credit union has with organizations so that they can offer credit union membership as part of their benefits package to their employees, members, and volunteers. First off, everyone is muted today, and you can drop your questions in the Q&A feature, which is located right at the top of your screen, after our presenter finishes, and then we will get to your questions at that point. For any questions that we don't get to address at the end, we will share contact information as well as other resources so that you will get them answered. Also, we will be raffling off a $25 Visa gift card as usual. So there will be one question. So we're asking you to get your typing fingers ready and all that good stuff. So stay tuned until the very end because we will ask that raffle question at the end of the Q&A session. Now, without further ado, let me go ahead and introduce Chris Greenhill, who is our private relationship manager. Chris, please welcome and take it away.
Thank you so much, Denise. And thank you for everyone that's in attendance today. I know this is a very busy time of the year, so I just wanted to thank you for your attention today, all about Adulting 101. So whether you're a young adult or you're someone who's starting to embark on your own, or maybe even a parent or a guardian of a young adult, we're going to spend some time today and talk about a few things and steps that you can take to better prepare yourself financially for adulthood. So while there's a lot to learn about being an adult, obviously we won't cover even or scratch the surface about what being an adult is all about. But we will touch on a couple things. We're going to focus on some key financial pillars today. One is building your credit history. Another will be what to expect or consider when you're getting a full-time job and preparing to live on your own. We'll also wrap up with some tips for long-term financial success that will carry you throughout your adulthood and really help you prepare for what's ahead. So let's start out by talking about building credit history. This is something that's important to understand and why you should do this sooner rather than later. So let's talk about what it means and how to do it. At its core, credit is an agreement between an individual and a creditor in which the individual receives something now with the understanding that they'll pay back the creditor at a later date. This can come in a variety of forms like a loan or a credit card or a line of credit. Your credit history is a record of how you've managed various forms of credit that have been extended to you, much like I mentioned earlier, like credit cards, loans, or lines of credit, and even more. A credit report shows you your credit history. It shows you the activity of all the open credit accounts that you have. In addition, it details about any closed accounts within a certain period of time. This shows you how you have handled your credit accounts in the past, as well as how you're currently handling your credit. Closed accounts can typically stay on your credit report anywhere between 2 to 10 years, and open and active accounts can remain on your account indefinitely, as long as they're in good standing and open. Your credit score is a 3-digit number that uses this information from your credit report to help creditors predict how likely you are to pay them back as agreed. Credit scores range anywhere from 300 all the way up to as high as 850. If they choose to extend credit to you, this is one of the things they're going to be looking at. So basically, a creditor uses the credit score to measure how risky it is for them to offer you a loan or give you a credit card, or even at what limit. Okay. And finally, your credit history. So both your credit report and your credit score can be the determining factor in a variety of things, like whether or not a new credit card is extended to you, on what the terms are. Your credit history can also impact whether or not you're offered or even able to keep some jobs. Your credit history can also be the determining factor in being able to rent or buy a home, as well as a variety of other situations. Your credit history impacts way more than just your ability to get a loan, which is why it's important to be aware of and focus on building a strong history sooner rather than later. So let's talk about the tools that will help you build or rebuild credit. One way to build credit is a secured card, which is required, which requires a cash deposit to open the account. Here at Northwest, we have what is called a first card. The security deposit reduces the risk to the lender because if you don't pay the balance, they already have the money to collect. People with no credit history or a very low credit score often must start with a secured card to establish or reestablish their credit history. Deposits are generally very low to get a secured card. On average, it's anywhere from $250 up to $500, but some may even be higher. With a secured card, when you use the card, you are still required to make your monthly payments on time. So even though you put that security deposit down and you don't have, say you needed, you had a balance on the card, you don't allow that balance to get paid from the security deposit. You still need to make payments to that card because that's going to be your credit history, and that's ultimately what's being reported to the bureau. Our first card is available to ages 15 to 18 years old with a cosigner, and 18-year-olds or higher don't require a signer to get the card. And we have no annual fees associated with our first card as well. So again, I want to emphasize your deposit is not used to pay for purchases on the card. And you will be charged interest on the balance if you don't pay the balance off that you use on the card from 1 month to the next. Another credit building product is a credit builder loan. The loan amount borrowed is held in an account while you make payments. So just like I was talking about with the secured card, where money is held for the secured card, this is for a loan. So generally, you can't access that money until you've fully repaid the loan. There's no risk to the lender because if you don't make your payments, again, the lender already has the money. It's important to make your payments on time, or you'll see negative reporting on your credit bureau, which goes against the whole purpose of getting this type of product in the first place. A similar product is called a CD loan. So this is a secure loan as well because the funds are being secured by a certificate. If you have money in the bank, you can use it as collateral for a loan, effectively taking out a loan against your own money. So that money is frozen until you repay the loan. So an example would be, say you have $1,000 in an account, and you wanted to do a secured loan. Then that $1,000, you wouldn't be able to access it with the loan, but you will also receive a $1,000 loan. So $1,000 will also be given to you. So then you would pay for this example, $100 a month back. So that's over 10 months that $1,000 would be repaid. And that $1,000 that you borrowed against would then be unfrozen. So obviously in this example, I haven't included interest. So on any loan or credit card, you potentially are paying interest. On loans, you definitely are paying interest. So that's the cost of doing the loan, but you're also building credit in the process. So here at Northwest, we just like we offer secured cards, we also offer secured savings and CD loans here as well, should that be your preference. If there is someone that you trust and trust you as that has a credit card in their name, they could add you as an authorized user to build some credit history as well. So typically accounts where you are the owner, there will be that there's more of an impact to building your credit. So if you're the owner of a credit card, your credit is going to build more aggressively or faster than if you are an authorized user, but you still can build credit as an authorized user. Okay. So, but being added as an authorized user is a good way to building or establishing credit, especially if you're not 18 yet. So the owner of the credit card is still liable for the debt, even if the authorized user isn't. But both of them are being reported to the credit bureaus. So there is risk there, right? Because if you or the authorized signer maxes out the card, that could have a negative impact on both parties' credit, as well as if there's any missed payments on the credit card as well. But if everybody does what they're supposed to do, this can be a good option for establishing some credit history until you're able to get an account in your own name. So I want to spend some time here and talk about credit score some more, and what that 3-digit number, where it really comes from. So the information that your credit score comes from is basically 5 main things. It's your payment history. And that's basically, are you making your payments on time every month? As you can see, this is the biggest factor that impacts your credit score. So this is the key to this is the key thing to prioritize. Even just 1 month of being late, excuse me, on one payment can have a significant impact on your credit report, and it comes very quickly. Amounts owed or credit utilization. When you get a credit card or a line of credit, it comes with a maximum limit, which is the maximum amount that you have to access on that credit account. Credit utilization looks at how much of that limit that you're using. And the more of that limit that you've used, when the way creditors look at this, the more of a risk you are to them, because they're seeing, hey, you're using a lot of this credit that's on your credit card. That's viewed as risky, and that may not be, that shows us kind of as a red flag, because they want to know what's going on, what's prompting you to use so much of it. So this is very close to payment history and plays a significant role in which your credit score would be as well. Length of credit history. Creditors want to see a history of managing credit over time. So the more, so they can more confidently determine what your risk level is if they were to extend additional credit to you. The longer your accounts have been open and active, the better. Okay. So, and then there's new credit. Maybe you've heard of hard inquiries or inquiries on your credit report, maybe not, but we'll talk about that here. So basically, when it still plays a role here on your score. Anytime you apply for credit, the creditor typically pulls your credit report to review your history and make their decision. This is known as a hard inquiry, which remains on your credit report and impacts your credit score for up to 2 years typically. While of course, we all need to apply for credit from time to time, the goal is to be strategic and only apply for new credit when you really need it. Having too many inquiries in a short time can really be viewed as a red flag to creditors, because they want to know, why are you applying for so many different things at one time? And then there's credit mix. Credit mix is the diversifying the types of credit that you have open and active. So instead of having 2 or 3 credit cards, consider having a credit card and a loan. Perhaps you even have a student loan, or maybe even have an auto loan. This helps as well. While they're small factors, it still plays a role, and it's important to be aware of it. So with this in mind, let's pull it all together and talk about how to actually build positive credit history. As I just mentioned, payment history is the largest factor that impacts your credit score. Missing or being late on just one payment can have a quick negative impact on your credit score and will take a while for you to build back from that drop. This is why it's important to make every payment on time every month. If you're concerned about keeping track of due dates, I absolutely recommend setting up automatic payments so you won't, so you can make sure your bills are paid on time every month. Maybe even consider opening a separate checking account, one for bills and one for spending. When you get paid, transfer all the money you need to cover your bills to that account so that you are sure the money is there when the automatic payment is pulled. We also mentioned credit utilization, or where your credit card balance is compared to the maximum limit. This is the second largest factor that impacts your credit score. Strive to always keep your balances below 30% of the maximum limit. Ideally, pay the card off in full every month. Pick one specific, expense every month, something like gas for your car or subscription service, or like Netflix. Use one of these things as an automatic debit, and then you can simply pay that low balance off and ensure that you're keeping your utilization low and your payments paid on time so that you can effectively build your credit. So this is a great way to build positive payment history while keeping a low balance and avoiding interest if you pay that balance off in full every month. Again, most of us are going to need to apply for credit from time to time, which is understood. Be sure to be strategic when you do. However, instead of frequently applying for accounts that you don't need, which can negatively impact your score, if you want to shop around for the best rates on something like a car or even a mortgage, these are a little bit different than applying for credit cards or other forms of credit. These, within a short period of time, you can apply for these types of forms of credit, and it counts as one inquiry within that short period of time. So 1 month. So that will count as one hard inquiry instead of multiple. This allows you the opportunity to shop around for the best deal without having more impact on your credit score. So again, that doesn't apply to lines of credit or a credit card. So let's talk about collections. Bills that you don't pay can stay on your report for up to 7 years and can have a quick negative impact on your credit score. Collection accounts can include anything from car insurance that wasn't paid, cell phone bills, cable or streaming services, or rental leases that are broken early. All of these things that can be sent to collections and be reflected on your credit report. Some people ignore collection accounts because they think that they should not be, they don't think that they're obligated to pay because they might feel that there was an error. But taking care of this soon as the past due bill appears or notice appears is important. You don't want to ignore that because you want to address what you feel is an error before it escalates and causes even more damage to your credit report. So don't just think that not paying a bill will make it magically just go away. You have to address it so that it doesn't cause harm to your credit both now and down the road. So review your credit report from annualcreditreport.com, okay? Which you should do this annually to ensure everything looks correct and that you're aware of everything that is there. Checking your own credit report and or score does not impact your credit score. Now, when I say checking your credit score, I want to point out that annualcreditreport.com doesn't give you your score, but there are third-party companies that do give you your score, and we'll talk about that as well. So, but reviewing it for educational and monitoring purposes is different from a hard inquiry, which could impact your score. Okay, so you may be familiar with online tools like Credit Karma that offers you a free credit score. While these can give you a rough idea of what your score may be, it's important to take the score provided with a grain of salt, as it's typically not the most accurate, up-to-date information. If you were to go to a credit union or bank to apply for credit, there's a good chance that the score that they pull will be different than what you see on Credit Karma. And finally, did we mention making every payment on time every month? This is worth repeating because it really makes a huge difference when it comes to your credit. All right, let's switch gears up a little bit here and talk about full-time jobs. All right. So you landed a full-time job, great. Landing a full-time job can be really exciting, as your paychecks would typically be quite a bit larger than what you were paid when you had a part-time job. The total amount of money that you earn is what is called your gross pay. So if you haven't received a paycheck before, this is something you definitely want to pay attention to. It's going to be your gross pay is the amount of money that you earn on a job. This can either be your salary, which is when you're told that you'll be paid a flat amount of money per week for the amount of time that you're expected to work, or an hourly rate, which is typically multiplied by the exact number of hours you work in a week and can fluctuate a little as the exact amount of time of you work may vary as well. Your net pay is the next thing I want to talk about. Net pay, however, is the amount of money that you actually receive on payday after deductions are subtracted from your gross pay amount. This net amount is noticeably less than your gross pay and can catch people off guard at first if they don't expect this. Those deductions include things like taxes, local, state, federal, as well as Social Security and Medicare taxes, as well as the cost of optional benefits from your employer that they may offer you. There's no guaranteed calculation to use to determine how much less your net pay will be than your gross, as deductions can vary and taxes can vary. So it's important to be cautious about your new income until you started seeing paychecks to know what your actual take-home pay will be. While benefits vary from employer to employer, they commonly include things like health, dental, vision insurance, potentially flexible spending or health savings account, additional insurances, and retirement plans. Flexible spending and health savings accounts may allow you to contribute money from each paycheck before taxes to help cover specific expenses. These expenses are specified by the type of account, but may include things like transportation, medical expenses, or even childcare expenses. There are a lot of rules related to these accounts, and eligibility for health savings accounts typically require enrollment in a high deductible health insurance plan. Okay. So while they can be a great benefit, be sure to understand how and when to use funds you contribute if you open a flexible spending or health savings account. We'll talk more about the importance of starting to save for retirement as early as possible a little later in today's session. Some of these benefits may be free to you because your employer pays for them. Some employers split the cost and some are offered through the employer, but you pay the full cost. Again, the cost of any benefits are responsible for paying, or you are responsible for paying, but they're deducted from your gross income before you receive your net income on payday. If you are currently on your parents' or guardians' insurance, be sure to check with them about how long that coverage will continue so that you can make sure the benefit elections that you have in mind make sense. It can be really exciting to get your first job offer. Before making financial commitments, renting a new place, taking out a loan to purchase a new car, anything like this, wait until you get your first paycheck to find out how much money your paychecks will actually be. It's also important to know when the benefits you choose to sign up for will start. There is sometimes a waiting period when you start a new job. In this case, you will need to calculate how much you'll be paying towards benefits when they kick in and subtract that amount from your initial net pay to estimate your take-home pay long term. This will be the number that you'll use to consider affordability of taking on new financial obligations. If you're offered an hourly position and those hours might fluctuate, base your financial decisions on the amount of take-home pay you are guaranteed to earn. For example, if you're offered a job with 35 to 45 hours a week, use the take-home pay for 35 hours a week. When you work more than that, great. That's extra money to put towards financial goals and savings. You can confidently know, however, that your needs will be met even if you work on the lower end of the hour range. And that's what you want to base your budget on. Same thing goes for overtime. Even if you're told you can expect or be eligible for regular overtime, consider this extra money to put towards financial goals and base your actual budget on the guaranteed income amount. All right. So next up, let's talk about moving out and living on your own. And the parents go crazy. Whether you plan to truly live on your own or plan to have a roommate, here are a few steps to take to advance your setup for yourself. When you're ready to start thinking about moving out, first determine realistic timelines. If you don't have any money saved up and need to work on your credit, it's important to know that it may be a minimum of 6 months before you realistically are able to think about moving out on your own. If you're in a situation where you really need to move out sooner for some reason or another, investigate what community resources may be available to you to help expedite that process. In general, though, start taking steps to prepare to move at least 3 months in advance, if not longer. Speaking of your credit, it will be important to know where you stand before you apply for places. If your credit score is typically, your credit score is typically the determining factor in whether your rental application will be approved or not. Review your credit report and determine from all 3 credit bureaus which can be seen and viewed on annualcreditreport.com. Ensure every report is accurate and that you are aware of everything that is on there. If something is inaccurate, file a dispute with the credit bureaus as soon as possible to work to getting that resolved. If you have any outstanding old bills and collections, especially if you for old rental leases or utilities, come up with a plan to get those paid and resolved. Landlords would not want to see outstanding balances owed to previous landlords or utility companies. It takes time to build or get errors. It takes time to correct errors on your credit report. So the sooner you start working on making sure that those errors are corrected before you move, the better. If you don't have any credit history at all, now is the time to start building some. Again, talk to a financial institution about a secured credit card or a credit building loan. These are tools that allow you to start building credit without needing existing credit to get approved. If you're moving out on your own for the very first time, you might need to purchase a few items. Make a list of everything that you need to be able to live on your own. You know, your bedding, your curtains or rugs, kitchen utensils and appliances, dishes, trash cans, furniture, electronics, and anything else that you might need. Now, Consider what items you must have before your first night in the place of your own, and what items you would like to have eventually, but could wait a little while. If you have room to store some of these items before moving, start looking for deals and sales on items that you'll know that you'll need. Like thrift stores, Facebook Marketplace, and neighborhood, they have a lot of clubs that on social media clubs that you can go in and find deals on as well. So it's a lot of places that you can find things that you will need to just get you started. They don't have to be your forever items, but they will help save you money down the road and help you get started off. If you don't have space to start buying items slowly ahead of time, prioritize saving money to buy these items so that once you get your keys, you're able to go out and get those items. It's important to do some research on rental prices and landlords in your area. How much you can expect on your rent in your neighborhood that you like to move on, that's something that you want to know. What landlords, housing complexes, or property managers have good reputations in that area, or perhaps even more importantly, which might the ones you want to avoid. What are the average rental lease length in the area? You can commit to staying in one place for at least that long. There are often steep penalties or fees for breaking a lease early. So you want to do your research and understand this before signing an agreement. Once you've done some research, determine how much you can comfortably afford to pay and rent with your other expenses. It's recommended to keep your rent payments below 30% of your gross income. But it's important to know what works for you based on what your expenses and goals are. Start putting the money that you expect to be your future rent payments into a savings every month. Not only does this allow you to start getting used to not having those funds to spend on other things to make sure that you can truly afford the payment, but also helps you to build a savings cushion before you move out. Now, you might be asking, well, how can I research these things? There, you can visit sites like Zillow.com, Rent.com, and you can plug in the type of place that you're looking to live in within the area, and you will see comparables about how much these places cost and what you can expect to be able to afford based on what your budget is. So speaking of moving out typically requires a variety of upfront expenses. You typically have to put down a security deposit that is often the equivalent of 1 month's rent, plus your first month's rent. In some cases, you may also be required to put down your last month rent too. This could mean you could be expected to pay 3 months worth of rent at once to be able to move in. So start saving aggressively to ensure that you have the money that you need to secure a place. In addition to moving expenses and purchasing the items that you'll need for your new place that we just talked about. Now let's talk about the unfortunate situation that I hope you never experience, but life happens. And many times things that happen are out of our control, like losing your job, or maybe you experience an injury or illness. And the list can just go on and on. Having a place on your own can be a big responsibility. And it's important to have a plan to keep a roof over your head, even if some things change in your financial situation unexpectedly. If something changes your income, or you suddenly have a large unexpected expense to cover, remember to treat your rent as a top priority, the most important financial priority. If you cannot make your payment on time, or you cannot make full payment, communicate that with your landlord as soon as you know this, to find out if there's any options available to you. The sooner you can start that conversation, the better. If at all possible, do not wait until the rent is already past due. The eviction process can begin as soon as 1 month past due in some places. So being proactive is key if you know there's no way that you'll be able to make your rent payment. If you have savings, this will be a good time to dig into it. This is when you want to turn your ringers off, mom and dad. I'm just joking. Can you pick up some extra hours at work or earn some extra money through a side gig? Get creative here and think about ways that you can bring in cash that you can put towards your rent. In some situations, there may be community resources available that potentially have financial assistance available to help with rent. Contact your local 211 hotline or 211.org for rental assistance in your community, especially if you've exhausted all your other options. 211.org is a great resource for multiple needs. It's created by United Way. It can help with a variety of needs outside of financial assistance. I give you another example. One of our community partners, Cornerstones, helps the community with emergency food and personal care supplies. They also make referrals for emergency clothing and other resources and financial assistance for rental and utilities, just to name a few. So we barely scratch the surface when it comes to things that you need to know to fully adult. But we want to wrap up with a few more tips for financial success. First, we've alluded to it throughout our time so far, but the number one biggest tip we can give you for long-term financial success is to create a budget and use it. Quite simply, your budget is your way to know how much money you have coming in and what you need and want your money to go towards. Your budget is your plan to reach your financial goals. As you start to adult and take on more financial responsibilities, your budget will likely change. The sooner you start getting in the habit of using a budget, the easier it will be to continue using it for financial situations and adjust it as situations change. To create a budget, list all your income, the amount of money that you know coming in to work with, then list your expenses, your bills, your groceries, gas, entertainment, anything that you spend your money on. And don't forget to build savings into your budget as well. List your expenses in order of priority. Then split the money that you have coming in to determine how much you'll have to spend on each expense every month. Then keep track of your spending to ensure you're staying within your budget. Consider downloading an app that can sync your accounts to track this automatically for you. If you need to adjust, be sure to move your money from a lower priority expense budget category to make sure your highest priorities like rent or basic need bills, things of that nature, are fully covered. A budget can be kind of a negative word, and a lot of people associate it with, bare bones and not being able to do anything fun. But this simply isn't the case. A budget is simply your plan of how much money that you have to work with and where you need and where your money needs to go to. It's up to you to determine a plan that works for you long term. Speaking of, the sooner you start saving as one of your top priorities, the better. Get in the habit of paying your future self first by putting money into a savings every time you get paid. I recommend setting up an automatic transfer so that you don't have to go in manually and move it yourself. This is important. Think about financial goals that you save for, both short-term and long-term, as well as general savings for things like emergencies. Consider saving for priority expenses when you're building your budget, and adjust the amount you save as your income grows. As your income grows, your goals can change as well. So drilling a little bit deeper into this, start thinking about long-term as possible, soon as possible. What does this mean? It's never too early to start saving for retirement. In fact, the numbers are staggering how much money you will have when you're ready to retire, if you start putting money away early and giving it more time to compound. While retirement may feel like it is literally forever away, starting to save retirement as soon as you start working full time is something you will absolutely not regret when retirement does roll around. You want proof? Ask someone near retirement or someone in retirement about starting early in retirement. You will likely hear, I wish I would have started early, or I'm glad that I did. Okay. When you start a full time job, it may be tempting to skip over starting to make contributions to your retirement plan. We encourage you to start saving for retirement as soon as you start working full time. Many employers offer a match with what you save for retirement up to a certain amount. If this part of your employer benefits, if this is part of your benefits employer package, we strongly encourage you to prioritize taking advantage of these because you don't want to leave money on the table. Another tip for long-term financial success is to get good advice. There are a lot of places to turn for financial advice and education. So make sure you're turning to a trusted resource, especially with the internet and social media. More people than ever have a platform to give you advice that may or may not be true or may not make sense for everybody depending on their specific financial situation and goals. Your financial institution is a trusted resource to start when it comes to learning about finances. Find out what resources they have, learn about topics that you're interested in and want to understand better. Many financial institutions have a full suite of financial education options so you can get trusted information in a way that resonates with your learning style. And finally, the last tip I have for you today, if you ever find yourself struggling with your finances, reach out for help. A big part of learning how to adult is learning that life happens, and a lot of times those life things are out of your control. If you've ever worried you won't be able to pay your bills, reach out as soon as possible to turn out what options you may have available and prioritize doing this before you fall behind if that's at all possible. Being proactive is key. The people you owe can't help if they don't know what's going on. So if you find yourself struggling, don't be afraid to reach out and see what your options are and what you may have available to you. The sooner you explore your options and come up with a plan, the better. You also don't want to do this alone. You can reach out to a financial institution like Northwest to support you or nonprofits. GreenPath is one of our financial partners here at Northwest. Many of the things we discussed today, my team here at Northwest and GreenPath are dedicated to helping you along your way. I encourage you to visit one of our offices, meet one of our representatives so they can help you and partner with you on your financial journey. GreenPath has certified counselors that can conduct free confidential financial assessments with you. And this is at no cost to you. This involves taking a look at your budget with you and collaborating to develop an action plan to help you work towards resolving any financial concerns or reaching your financial goals. I think they are a great asset because they also will serve as a great introduction to working with financial professionals. You can reach GreenPath at 877-337-3399, or you can learn more at my.greenpath.com. They have a ton of resources there, and I think that you will find them tremendously useful. Now, if you're not a member or interested in becoming one, we have several locations that you can visit and receive great support. You can visit our website at nwfcu.org for more information to become a member as well. If you attended today as a young adult, I hope what I shared with you today makes your transition to adulthood a little easier. If you know a young adult that would benefit from the information I shared, I encourage you to share that information with them as well. That's all I have for you today. I'm going to kick it over to my partner, Denise, to address any questions you may have.
Great information, Chris. Thank you so much. This was definitely a lot to take in, right? For young people, it can get very overwhelming when you first get started. But some really good guidelines here and what to do and what not to do. So super appreciate that. So now it's time for the more fun part where we can actually answer some of your questions, right? So I know that you guys some of you are burning probably to get your your questions answered, sorry. So if you want to head to the Q&A section, which is on the top of your screen, right next to chat, and in between chat and people, open the Q&A, click on it, and then type your questions in there. And while you guys are doing that, we in the meanwhile had gotten some questions beforehand, so I want to pose those to Chris and see if he can help us answer those. So one of the ones that were posed were, can you give an example of another community resource that provides assistance when it comes to moving out? And Chris, I know that you had mentioned 211 in that section. So if you could elaborate on that and tell us a little bit more about some of these other resources that are available, that would be great.
Yeah, absolutely. So yeah, 211.org. That is through United Way, and they provide a lot of great support around a lot of different financial resources that you would find useful, depending on if you're struggling through a situation, or maybe just want to learn about some additional resources in the community. Some others are Salvation Army. Salvation Army has a lot of great resources to help people that are going through a tough time, to help them to maybe get over that period and be able to get back on their feet. A lot of local churches provide a lot of great support to the community as well. The HUD offers assistance for rental and housing as well. So if you find yourself in a tough spot there, they can provide help as well. I mentioned earlier in terms of researching, if you were just trying to find affordable place to live, I'm sure a lot of our young adults here are very, very great at researching things online. So if you visit places like, rent.com or Zillow, places like that, realtor.com, you can find rental places in your area. And, that's a great place to find what the places look like, which you can afford, and make sure that you're not paying more than what you should for a place to live.
Awesome, great. And then we haven't gotten any questions yet from the group here, but so let me pose the second question I got. Who can you reach out to when you are finding yourself in financial distress? And I know that you had mentioned some resources there. Obviously us, right? Northwest Federal. If you're a member or not a member yet, we can certainly help you with whatever it is you need. But what are some of the other things that they can do?
Yeah. So obviously, you can reach out to Northwest, making sure that we're taking care of our membership and community to the best of our ability is a big priority for us. I mentioned our partners at GreenPath. I just took the slide back here as well. GreenPath, not only do they provide education, they provide counseling as well. So if you need help with debt management, or you found yourself in a tough financial situation, they can also help get you back on the right track there as well. So I think being able to contact them as well as us, between both of us, will definitely get you pointed in the right direction if we can't give you the answer ourselves.
Awesome. Thank you for that. And if you're a member, you have access to GreenPath's resources for free. Also via our website, their portal is integrated in our website. And what I like about them is that they will actually look at the credit report with you, walk you through it, and tell you exactly what you need to do in order to improve. So I love that part. GreenPath is amazing. So definitely take advantage of that. So now we still haven't gotten any, hang on, now it says new posts. Okay. Hang on. Let me put on my reading glasses because I'm not as young as some of you. All right. Is only paying 30% on rent still practical advice when it seems like renting costs and other things are going up? Is it more now or still the same? I want to make sure I'm practical about potential costs when I move out.
Yeah, it's a good question. It's a good question. is it practical? I would say it is from a standpoint of when you consider the cost of living, that is the highest expense. But if you look at just over the last couple of years, the rising cost of everything else around us. So say you've extended yourself over 30% on your rent, and now other expenses are rising as well. Do you have the flexibility to adapt and absorb the rising costs with other expenses? So yes, you have the flexibility to go over 30%. Obviously, you can do that. You could get approved for it. But it's a reason why that percentage is recommended at that rate, because we want to make sure you have the flexibility to absorb fluctuations and costs, as well as obtain other financial goals that you have. So it's really a case by case basis. And I think what's going to drive that is what your budget is and what your goals are.
Good answer. I know it is tough with in today's environment with all the expenses are up, but that was great advice, Chris. Thank you. So I don't see any more questions at this point. So we are going to the raffle question, the very exciting part about the webinar. So I would invite you to go to the chat function, which is also here on the top. I've also added some messages on here already. So go to the chat function, and I will pose the question, and then whoever answers the question correctly first will get a $25 Visa gift card from us. Again, I will pose the question. You will type your answers in the chat feature, and whoever gets it right first, you will receive a $25 Visa gift card. All right, so I'm going to go ahead and pose the question. Hope you all are ready. What factor has the biggest impact on your credit score? Remember that graph that Chris was showing where he was going over credit score and all of that, and what is the biggest impact on your credit score? All right, heart inquiries, that's definitely a good one, but that is not the answer we're looking for. I see somebody else telling. Okay, on-time payments.
Ooh.
Yes, yes. So on-time payments, I mean, is in the right direction, right, Chris? Do we want to go with that one? Okay, all right. So according to the graph of what Chris was talking about earlier, payment history, oh yeah, if you can go back to that, that would be great, makes up 35% of your credit score, right? So the term payment history is what we were looking for here. But Dwayne, I get it. It's the same as on-time payments, right? You want to make sure that they're on time. So Dwayne, you are also the first one to log in, so which I appreciate. So I'm going to make you the $25 Visa gift card winner, and I'm going to write your name down, and I have your email address from your registration. So you are good to go here. Congratulations. Yay. And if you guys come up with any more questions after we're done here, by all means, email me, and I'm actually going to put in my email address here. And I will help you find the answer to it. Chris and I are both very, very passionate when it comes to financial education, especially helping our young people get started. So I will also include in the email that I will send around with the link to the recording of this webinar, I will send out a budget worksheet that I actually obtained from the Federal Trade Commission. So I will scan that in, send that out along with it, along with some of these other links that we talked about, like moving.com, where you can get some other resources with help for rent payments, et cetera, as well as 211 and all of these different things. So all of those resources will be included in my email to you. All right. Now, in the meanwhile, you will get a recording directly from Teams. So that will be a little bit different, and it will basically start from 12 o'clock on, unfortunately, because that's when we started the webinar. So wait for the email that you receive from me with the link to YouTube, and that will have all of the resources on there for you. All right. Again, if you have any other questions, please feel free to email me and I will try to get the answer for you. Thank you so much for your attention today, and thank you so much for joining us. And please, once you get the recording link, feel free to share it as many times as you want. This is important information that we need to get out there for our young people. All right. Thank you guys so much, and I hope you have a great rest of your day. And thank you so much, Chris, for joining me today.
Absolutely. Thank you, everyone.
All right.
Thank you.
Have a great day.